Hey, it's Brian from KineticTrader.com. We're going to do a follow-up video here on Fibonacci retracement levels. This time we'll look at an intraday chart for people that are more active, say day trading. And as the general disclaimer at the beginning of any financial video you see, essentially they have lots of fine print saying you can lose money in trading. So this is my little disclaimer. You can lose money in investing. Nothing here is to be used as a recommendation and to understand what you're doing before you're investing. So we're going to talk about Fibonacci levels. I mentioned what they are in prior videos, and you can look it up to understand Fibonacci, what it is. But again, the most common ones, we'll delete this stuff. I'll show you how to do this if you use Thinkorswim. Excuse me. So this is the ES chart, which is the S&P 500 E-mini contracts, and this is a 3-minute chart. And to do Fibonacci levels, generally you just want to use them to give you an idea of where it could find intraday support or resistance. You can use Fibonacci on any time level, day trading, weeklies, monthlies, whatnot, but we're going to look at it intraday. So here's your recent move from the prior day. So this is good to get an idea of where support and resistance levels could be. I'll draw it backwards and I'll show you the levels to look at. So this was your move from the prior day of your low and the high, not the entire day. You can see the entire day had a big move all the way up there. But we'll just look at the recent move, because when the E-minis open up in the morning, they do kind of reference the prior day's move, especially towards the last end of the day, to give you an idea of resistance levels. But it is good to look at the entire move of the day for the prior day too, and you can see the resistance on the move for this day was right in line with the prior day. But we're not going to focus on support and resistance levels right now. We're going to just talk about Fibonacci. So the major levels again was the 61.8, the 50%, and the 38.2. You can use target levels for get an idea of where it can move up to. Is 127.2, and higher up here you can't see it, is 161.8. Here I'll just click on the line, just randomly drawing a line here just so you can see these levels. So you can see the 127.2 and the 161.8 are in that purplish pink color, and you can set those as your default. Those are generally the major levels that most people reference, so they have the most significance. You just right click on the Fibonacci drawing as you drew it, you click on edit properties, and you hide the minor ones, these ones, and you leave the ones, this is again for Thinkorswim, you leave these ones available to view. So you can see they don't have those checked. You can set those as your default and just say save as default, and it will show that each time. And what you do is, for Fibonacci, you draw from the low to the high of a recent move to get an idea of where it could retrace to. So if you're in an uptrend, you draw from the low to the high. And if you're in a downtrend, you draw from the low down to the new low, or the high down to the new low. I don't know. On these, they set the 127.2 and the 161.8. You draw kind of backwards. So I'll delete this, and you draw from the high back to the recent low, and there's your target. So, you know, again, it is good to get an idea of roughly where you can see your tracing level, but say intraday, if you're looking at using these intraday, you want to set the intraday high. So we'll see where, you don't know where, if it's going to keep moving higher, moving lower, so you kind of want to let it settle down and figure out where the more recent active high and low is to get an idea of where your first retracement is going to be. So with Fibonacci, you want to show the overlapping levels. So this was the recent major move, and this was the minor move, so you can draw overlapping ones, and it opened up, say that was your high. So you can see if it's going to find support levels, you can look at these levels of a healthy trend, 38.2 and the 50% of the minor one, and for the major move you can look all the way down here. So it's a little gray on if it's going to fill the gap or if it's going to move higher. There's not a lot of price bars here to tell where it's going to go. So if you're aggressive, you could trade the small move here, or if you're more conservative, you want to let it see if it's going to, after this first hour, if it's going to fill the gap or not. So we'll delete. We'll leave that there right now. We'll move forward a little bit. So again, you have these levels, you're looking for overlapping. Delete that drawing. So we opened up, you got the low, you got a little slightly higher high, so you can adjust this. You right click on it, you click on activate, and you draw the little square to the high there. Just hit enter. And this is kind of backwards because of these targets. It doesn't really matter. You're still looking at the major support levels. And as you can see here, you're looking to see if it's going to hold at 38.2, the 50%. That is right kind of at the lows where it bounced here. It did show a little bounce, but it didn't show much of a major bounce, so it does look like it could retrace. It filled your gap here, so now you've gone from initial low to a higher high, but now you've broken that, so now it looks like you're in a downtrend for this current day. And you're not looking as much at the prior day's move, because now it starts trading independently for the day. You've already had a good hour go by here. And we'll delete this level here. Sorry, my computer froze up. So you can see it retrace, it filled the gap, so you're going to kind of let it settle down and see where it's going to go. It's got a lower low, so you can draw. This was your initial move. So when it hit here, you saw that it's going to, oops, it might move lower, you're not sure. So what you did, you drew it from the open to the high. You draw your targets of the 127.2, 161.8 down to, since you're in a downtrend, you want to see where it can move down to. And it did find support down in these levels, so right now this is your active low. And so now we want to do it from the high of the day to the low of the day, and see, now that you're in a downtrend, it looks like it might retrace up to these levels and move down until you see it move higher on the day. You're in a downtrend. So it did hit up here at the 50% level. This is the retracement from the high of the day down to the low. You can see it's 50%. We'll get rid of this one, because again, when you hit the new lows, you can get rid of the minor moves like that. So this is your major trend so far for the day. Remember, you did the initial move here up to here. It did fill the gap, so that wasn't really a major move, and it went all the way down to right around the 161.8, and it did bounce there. So that would have been your initial potential retracement level, but it did just kind of turn right over. So I'll delete that. So now we have our low, and you're moving along here and you're wondering, I want to cheat and let you guys see where it's going to go. So you're high, you hit a new low, you're waiting to see if it's going to retrace. You're looking to stay short because you're in a downtrend now for the day. If you shorted here the 38 and the 50% with a stop just above the highs of these levels, or the 61.8. Again, most people use like pivot points or another overlapping indicator to give more significance to stop levels. And it moved down here, your price target could be back down to half the distance between the move, or back down to just below the recent high. Or if you're not looking for real short intraday, you could just scale your stop down as the stock moves back down. So say you put in a short stop here, right in here, and you had it moving down at the lows of each bar, you get filled right back here. So you had a kind of a break-even trade. Again, it's kind of chopping around, so it's kind of hard to find an intraday trade. But you found resistance, the second high here. It did move back up higher, so you could draw. Now we're looking like you might move higher for the day. And we'll draw it this way because it looks like move higher. So technically you haven't taken out the highs of the day, but in these shorter term swings, again, you're looking at intraday basis, you are setting higher high and higher lows, so you are moving higher. So you can set it with maybe a target up higher Your target could be just at the resistance of the high of the day, because it could retrace and the whole move for the day might end up going back down. So moving up higher, you drew the levels here for a really small move. You could have drawn right here. It's getting hard to see all these, so we'll delete this for a second. So the stock moved up higher. You saw that it retraced here, did a small move, but as it took out that low, which you would have had a stop, it went down here. It was the price target of the right around the 161.8, 127.2 was right down here for this move here. So it did hit that target, and you're waiting to see where the trend was going to go. You could have drawn a minor little move here. Again, a minor move here. It retraced here. Could have done very tiny moves. This is only a point and a half in the E-minis if you're really active. Or you could have just had a buy point here with your stop just below these recent lows, or just right around this congestion area, which would only been like a risk of like a point. You can see it did not take out the low here. It's moving higher. If you had a target, it would have been again right around these highs, or if you, as you saw it move higher there, you're saying, oh, it might start moving back up for the day. So you had your active targets. These are the common target prices, and as you saw it break higher here, your target would have been the 127.2 or the 161.8. It did, and it hit 161.8. So generally, again, if you had gone long at, say, these support levels back here, which for this minor move was right around here, it didn't take out those lows here, so it moved higher, and it hit your target here. We haven't broken higher for the whole day, and as it chopped around here, nothing really would have happened because you already hit your target here, but you're waiting for a retracement level. What you could have done is, I'll delete that. You could have done is, now this is your high, and looked for it to retrace here again. So you sold, you took your profit there. You're waiting for a pullback, say down to these levels. It did just get down to this level. This is reversed. I don't know why it does it like that, but the 30.8.2, you can see it bounced right here, moved higher. Oops, it's breaking higher again. You want to figure out your target. Delete it. See if it goes all the way up to 127.2. You can see it hits 127.2. That would have been, again, your target. You had bought here at the 38.2% retracement with a target of either the high or moving your stop up to hit the initial target 127.2. To hit that, you're out. Now you're trying to see where it's going to go. And it kind of chops around here at the end of the day. So you can see those have some major significant levels of support and resistance. You just move your lines along as it hits active higher highs or higher lows. At the beginning of the day, you kind of want to look at the prior day's move and get an idea of where it could retrace to on the first move. And hopefully that was helpful. Thanks for watching, and look forward to the next video. Again, it's Brian from kinetictrader.com.